Okay, welcome back. And we're joined by Abhay Agarwal, founder and fund manager at Piper Serica this afternoon. Abhay, welcome. Let me first start off by understanding how you're seeing the setup at this point. In terms of the volatility, of course, it's gone up. But talk to us about valuations and how you're seeing the Nifty and whether earnings pick up significantly post Q3, because Q3 suffered from a couple of one-offs, including the labor code adjustments, which most companies have made. Does Q4 really be meaningfully better, in your opinion?
Yeah, hi, Harsh. So I think you're absolutely right. I think this week has been quite volatile starting from Sunday. But I think the market has digested the good and the bad and now is looking for the next set of triggers, which would be the earnings, because I think the valuations, if you look at it after the sideways consolidation over the last year, especially in the mid and small caps, have come now to the fair range. So I don't think anybody would call the Indian markets, whether it's the small caps or mid caps or large caps, as overvalued market. I think once you start building growth into the earnings, I think we are fairly reasonably valued. I don't think the worry with domestic investors or foreign investors is that the markets are overvalued. So I think it's now a market that is ripe for a break on the upside, subject to liquidity flows. And I think the primary candidate for that liquidity flow is the FPIs, which have been constantly selling over the last 13, 14 months. So what we are seeing is an early stage of reversal of that flows, especially driven by the correction in the US markets, the tech market, the NASDAQ especially. And I think that is required for the emerging markets to get more flows and the Indian market to get big flows. I think the trade deal has been a very positive sentiment boosting event, because a lot of people had just given up on a trade deal. So I think it's a very pleasant surprise, shows that the government has full intention, and I think it's a great signal to the international investor community that the government means business and it will get a fair deal done wherever it can. So I think there will be days like today that you will see some selling into that, some profit booking. But overall, I stay pretty constructive on the Indian markets. I think the Q4 earnings will be better than Q1, Q2, and Q3, because what we are finding from our channel checks is very robust demand at the consumption level, at the services level. So I think as far as the Indian domestic consumption market is concerned, very robust. Rupee has kind of found its range. The macros are very stable. Interest rates are under control. So I think my personal view is that we are gearing up for a rally driven by FPI flows.
Very interesting. So if FPIs do come back, Abhay, what are the sectors, pockets which look good? Banking, financials, IT, you go back to the traditional ones. And IT, there's obviously plenty of debate happening there. I'll come to that in the next question that I ask you. But is it the traditional sectors? Is there something new in terms of opportunity that that FIs will hunt for?
I think it's going to be a mix, Harsh, as it always is. You know, we have seen that there are FPIs that like to stick to traditional stories which are still growing. But one thing is very clear, whether it is new or traditional, growth sectors, growth companies will be the primary beneficiaries of these flows, because FPIs are looking to make money from India's growth story. And that is why the focus will be on growth. Sectors that have corrected but are not growing will not find any favor, is my belief. So banking, financial services, definitely, I think it's the sector that has again seen correction, valuation correction. And when you say financial services, it's a broad spectrum. It's just not the lenders. It's much more than that. So I think as India's GDP grows, the whole financial sector, lenders, non-lenders will continue to do well, continue to grow. So I think that will get a lot of capital. I think pharma this time will look very interesting, because there are young companies that are now coming up. Some of the results have been absolutely amazing. So I think pharma is another sector. The third I would say is domestic consumption driven autos and auto ancillaries. Especially, I think a lot of our auto ancillaries have now become global level players, and they are going to start throwing their weight around in next 3 or 4 years. So I think these are the 3 or 4 sectors I think you will see flows coming back to.
Okay. And Abhay, where do you sit with regard to the IT versus AI debate? Is it going to be IT companies coming out trumps in this new AI world, or will it be dilutive to Indian IT in terms of an impact?
Harsh, we have been very, very negative on the Indian large cap IT services companies for the last 4 years. We haven't had any IT services stock in our model portfolio. And the reason is what is playing out right now. There's been a complete lack of growth for the last 3, 4 years. The guidance is also pretty poor. Margins have been under pressure. And the primary reason for that is nothing to do with the global demand. It is only to do with the time and material billing model that these companies haven't been able to switch out of. So it's still the model that requires them to hire a lot of freshers at 4 or 5 lakh rupee average entry salary, and then bill them at a rate that gives them a 20% plus EBIT margin. And I think that model has completely outlived its utility, and now these companies face a very serious threat from the AI companies, and they faced this threat last year from SaaS companies and could not do anything, and now it is even more potent threat from AI companies, and AI companies are now disrupting SaaS companies. So I think Indian IT services companies have fallen far behind this technology curve. They have been busy giving money back to shareholders in form of buybacks instead of investing in innovation, investing in new technology. So quite disappointing overall, Harsh. I don't think anything is going to change that. I don't think these are growth stories. So investors need to be very careful and not look to, bottom fish or bargain hunt in this space.
How should you play the AI theme if you're an Indian investor, Abhay? How are you playing it? Is it through data centers, or do you believe that that will largely become commoditized eventually? And therefore, how should one play the innovation part of the theme?
No, I think there are data center definitely, Harsh. I think that's going to be a humongous demand in India, and I think compliments to the finance minister for taking that head on in the budget and incentivizing foreign players also to set up data centers in India. I think that's going to be as big an infrastructure story as our airports and roads are. So data centers are going to be right primary center. But again, data centers have a margin restriction because it turns out to be in some form or fashion a real estate play. So where is real innovation taking place? I think again, I don't think India will have a pure play AI company. There are a lot of companies in the startup space. We have a venture capital fund that invests in AI companies. So we are seeing a lot of opportunities there, but these are young companies. I think in the listed space, investors will have to focus on companies that are using AI as an internal tool to boost their processes, cut their costs, become more competitive, get better controls. So we are seeing that happen in financial services. Large banks have started using AI tools. There are FMCG companies that are new age companies that many of them listed recently are using AI as internal tools. So I think this will become a big checklist item for investors going forward, that the companies that they are investing in, how innovative they are as far as using AI tools is concerned.
And Abhay, how should one look at the India-US trade deal of sorts? Of course, the fine print is still not completely out, so we don't have a clear signal as to how much has India given up for this trade deal, because it will have to be that way. But this 18% rate, how do you play that theme? Do you play it through textiles, or have the stocks really run up? Therefore, how should one play it? Is it through pharma maybe? I know you're positive with regard to pharma. So is pharma the other way to play it? Chemical, pharma, generics and the like?
Yeah, I think many opportunities. I think textile is obviously, that comes to mind because a traditional large sector. But if you look at the emerging sectors, pharma especially the CDMO companies, generic companies also that will benefit now. A lot of companies now in India are moving beyond just being generic companies. They have done 150, 200 ANDA filings in the US. So there's a lot of innovation involved there. They will benefit. I think our auto ancillaries will be a big beneficiary. A lot of them have built sales presence in the US, and for last quarter or so they were struggling with the US tariffs. The order book was a little weak, but now that will clear up. I think in any trade deal, Harsh, there is always going to be some give and take. So as you said, we don't know the fine print, but I'm not expecting any big negative surprise there. I think it will be a fair deal. And as I said, the most important thing is the signaling is very positive, that India is not going to just back off or not work on it, is going to engage. And I think it's a positive sign for US investors. A lot of them were worried that in case a trade deal doesn't get signed, will the US administration become more adversarial and put further sanctions or tariffs on India? So I think that fear is out, and that gives me the confidence to say that, look, the US investors will look at India more favorably now that big risk is off the table.
Abhay, it's always great chatting with you, and especially in a week like this, to try and put everything into perspective. You've articulated it clearly. Stay away from IT. There are various ways to play India-US, and the best way to play it is obviously the fact that FI investors are going to gain a lot of comfort from the way in which they are viewing the deal and the possible relationship post this deal. Thank you so much for coming in and speaking with us.